Stocks on Wall Street and well in the green, fueled by strong gains in the tech names. S&P 500 and Nasdaq close higher for the third straight day. Stocks in Asia mirror Wall Street and open higher in trade. The GIFT Nifty is indicating a gap up start for the Indian market. Oil prices edge higher, supported by weaker U.S. dollar, concerns of a likely OPEC Plus output increase and a possible ceasefire in Russia-Ukraine. Raising supply keeps the gains in check. Gold prices bounce back after a sharp drop. Axis Bank beats estimates in Q4 FY25. Net interest income increases over 5% annually, while asset quality improves. On the other hand, Tech Mahindra, it was a mixed number and mixed quarter coming in Q4. Revenue growth missed estimates and margin at 10.5% was ahead of street expectation. And in important earnings to track today, big boy Reliance will report its numbers. The company is expected to report a steady set with revenues rising 1% in Q4. Also, watch out for numbers from Maruti. Margin may contract slightly on account of other expenses. In the aftermath of a Pahalgam attack, India sends a formal letter to Pakistan stating that the Indus Water Treaty will be held in abeyance. Pakistan's terms it as an act of war and suspends all trade with India and even closes Pakistan's airspace for Indian airlines. All bilateral treaties with India have been put in abeyance. Hello, good morning. You've tuned into Power Breakfast on CNBC TV 18. I'm Vinny Motiwala, and thank you so much for tuning in, as always. A look at what the Asian markets are doing this morning, given the handover that we have from the U.S. market as positive. Asian markets also have opened up on the positive side. Look at the Taiwan index, managing to hold on to gains of almost 2.5%. Hang Seng is holding on to gains of 0.8% in the morning trade. Nikkei, ASX 200, all of them managing to hold on to good green in today's trading session. Nifty implied open, that's indicating a positive start for the Indian markets as well. 155 points uptick, so gap up start is what we're watching out for in terms of the Indian market. Yesterday was a bit of a muted trading session, range-bound trading session, but today clearly positive indications coming in for the Indian markets, given that we have a positive handover coming in from the U.S. market as well. And talking about U.S., Wall Street ended higher. Three major average indices, when you look at it, that gained for the third straight session. The gains were supported by advances that came in from the mega cap technology names, which had taken a beating over the past month. Investors were fearing mainly the rise in global trade tensions, which impacted all those stocks in the last month. Now, Alphabet, when you look at it, that gained almost 2.38% and jumped 4.63% in extended trading hours. And this came in after Google's parent reported the first quarter revenues that exceeded the expectation of the street and analysts. Now, Microsoft stocks price rallied almost 3.45%. Nvidia shares were up almost 3.6%. Apple stocks also advanced 1.84%. Tesla stock prices added almost 3.5% as well. So that's the update that we have coming in for you all this morning in terms of the U.S. market. And you know, that is what we're watching out for in terms of the U.S. market. But let's also listen in to Phil Camperell of JP Morgan Assets Management discussing market outlook and his views on whether Fed will cut rates and what is the outlook there.
So earlier this year, on first week of February, Treasury Secretary Bessent said that the administration's focus is on rates, and we continue to believe that. I think April has kind of proven that. We're believers that Jay Powell is going to make it to the end of May of 2026 and the end of his term. And at the end of the day, if the labor market were to slip, the Federal Reserve will be in play, and I think the 10-year note will provide a positive return versus equity markets that could be selling off. I just think that in a world where growth is slipping, I think that's going to burn out inflation, and the Federal Reserve will be more focused on their full employment mandate. And I think we've heard that from a couple of speakers recently. Fed's priced to do about 3.5 cuts this year. We think that they could start to move in June.
And the Bank of England is focused on the potential impact of U.S. tariffs on UK economic growth if there is a slowdown in global trade, says the central bank's governor, Andrew Bailey. Listen in.
In terms of growth, I'm afraid I do, first of all, in a sort of longer term sense, if you reduce the openness of the world economy, that will have a negative effect on growth. Now, if you reduce trade, you reduce productivity growth and you reduce growth. I think on top of that, there is then, at the moment, what I would call the uncertainty effect. And we certainly see this. I see it when I talk to people in the UK economy a lot. They are worried about just the sheer level of uncertainty now in the world economy, the sheer level of uncertainty in policy.
No retaliation.
Border retaliation would have an effect. Then if there was redirection of trade, I mean, if exports started being redirected into other markets, that could actually be negative for inflation. And then the effect on exchange rates, although for us at the moment, there has been some effect, but it's not been that large.
Okay, that's all the global market action that we have for you all this morning. But how is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for, as well as what's going to be happening in the world of F&O. Hormaz as well as Sudarshan, good morning. But before I come to both of you all, let me set you all up for trade and let's look at what the market will look like today. So in terms of Nifty, 7 days of gaining streak was there, and yesterday that was snapped. Now today again it's an indication coming in of a gap up start, but Nifty yesterday had closed below the 24,300 levels. Nifty was down almost 0.3%, sensex similarly down 0.3% as well. Banks, that was under pressure as well. So where we had seen ICICI Bank, HDFC Bank gaining at the beginning of the week, yesterday, it was a bit of a subdued session there. FMCG was not doing anything well. We had numbers that came in from HUL and Nestle. And because of that, HUL was among the top Nifty 50 losers. So HUL was clearly under pressure. Britannia was also one of the stocks that was down and out in trade as well because of the earnings that came in from HUL as well as Nestle. Moving on to the flows that are coming in from FII as well as DIIs. FIIs continue to be buyers. A strong 8,251 crore buy coming in from FIIs. DIIs were sellers. On the other hand, 535 crores. Key earnings that we're keeping an eye out on today, and that maybe could see some bit of a movement today's trading session. So Reliance will be reporting its numbers. We have Maruti, Dr. Lal, Hinz, as well as Shriram Finance among some of the names that are reporting their earnings today. Important cues to watch out for. Countries are in talks with the US for those bilateral trade agreements. What's happening on that front? Any update on that front will be key. Positive handover from US and the beginning of Asian markets is on a positive start, and Nifty implied open indicating a gap up start for the Indian market. So it will be interesting to see where we are headed in today's trading session. But let's move on, and Hormaz, going across to you for which are the important stocks to watch out for in today's trading session. Good morning.
Good morning, Vinny. And it finally seems like earnings season is finally picking up pace now with the number of results that we have to track over the last couple of days. But Axis Bank's results after market hours were better than expectations, although the net interest income was up 5.5%. Profit, though, was flat compared to last year. Asset quality has seen some bit of improvement on a sequential basis. Now, Tech Mahindra's constant currency growth was worse than what was anticipated, a 1.5% decline compared to a 0.5% decline that was expected. The dollar revenue was down 1% as well. Margins, though, of course, because of the rupee depreciation, were improved by 30 basis points from last year. LTTS, they are expecting FY26 to be a better year compared to FY25, and we are seeing this commentary across mid-cap IT, reaffirming that they are going to hold on to their medium-term revenue outlook of $2 billion, and they also mentioned that their large deal pipeline remains robust as well. Emphasis had good numbers as well. Their highest sequential growth in 12 quarters. Their TCV growth was the highest in 7. They're expecting to remain above industry growth, aided by these strong TCV wins, and they're targeting EBIT margins to range between 14.75% to 15.75%. Cyient, though, among one of the outliers in the mid-cap IT space, they've offered no guidance, and they're expecting these near-term uncertainties to persist at least until the first half of FY26. SBI Cards, well, their profit was down 20%. The net interest income was up 7. NIMs improved slightly, but credit costs continue to remain elevated for the company. The IEX, their fourth quarter revenue was a miss because of the lower per unit transaction fees, and their profit was up for 21% from last year as well. Also track earnings reactions from SBI Life, Macrotech, Aavas Financiers. Keep an eye on IndusInd Bank as well, because they have not received any instruction from the RBI to stop onboarding MFI customers, and keep an eye out on Vari today because of the shareholder lock-in that ends today. Back to you.
Okay, Hormas, thank you so much for that. We'll keep an eye out on those stocks over there on the back of news flow. But Sudarshan, what are we expecting in the world of FNO? Obviously, yesterday was expiry, so new session starting today. What should we watch out for?
Good morning, Vinny. So we are expected to start the May series on a strong note after a muted day of trade that we saw yesterday. All the front indices were down, but following the positive global cues, GIFT Nifty is indicating gap start for today. Now, talking about the flows, yesterday it seems like the dip that we saw in the market was used by FIs for buying. Yesterday, FIs have bought more than rupees 8,000 crore, while minor sell figure has come in from DIs, where DIs have sold more than rupees 500 crore. As far as April series was concerned, Nifty saw a gain of more than 650 points. But if you check the gains from the recent lows, the gains were as much as 2,500 points and a little more than that. As far as rollover is concerned, for April-May rollover, currently it stands at 79%. It's almost at the same level. That's the 3-month average of 80%. FI's long exposure. We are starting the series of May with a long exposure of FIs at 41%, which is highest in last few months. And as far as key triggers for May series are concerned, first, Q4 results have been coming in. So going forward, we'll be tracking all the results that come. Second, US FOMC outcome is expected on May 7th. That also that we'll be keeping an eye on. And geopolitical developments that will keep coming in, because like Trump keeps commenting every day, so we'll have to see what exactly he talks about tariffs and other stuffs. And lastly, important levels for Nifty. Support is seen again around 24,100 to 24,120. Resistance, first resistance is 24,400. If we cross that, next resistance comes is 24,600.
Okay, Sudarshan, thank you so much for that. Keep an eye out on those levels over there. But on that note, we're going to slip into a very short break. And up next, we get you the latest updates on Pahalgam attack and India's response measures. What's on that front after this break? Welcome back to Power Breakfast on CNBC TV 18. And now, ties between India and Pakistan have come under severe strain in the aftermath of the Pahalgam terror attacks, which killed 26 and injured 17 people. The government convened an all-party meeting in Delhi to brief the lawmakers on the Pahalgam attack. Top union ministers, leaders of the opposition, Rahul Gandhi, and other key opposition leaders were in attendance. India's highest decision-making body on national security unleashed its response against Islamabad on several fronts, including the suspension of the Indus Water Treaty and cancellation of visas to Pakistan nationals. India has also downgraded its diplomatic ties with Islamabad by reducing its mission strength. India sent a formal letter to Pakistan stating the Indus Water Treaty will be held in abeyance, stating sustained cross-border terror has impeded India's utilization of rights under the treaty. Pakistan has not yet responded to India's request to enter negotiations to modify the terms of treaty. However, Pakistan commented that any attempt to stop or divert flow of water belonging to Pakistan as per Indus Water Treaty will be considered as an act of war. Parikshit is here to take us through the significance of the treaty and what its suspension could mean for both the nations.
What is the Indus Waters Treaty? The objective of this treaty is to ensure satisfactory utilization of waters of the Indus system by Pakistan and India. It was signed between India and Pakistan on 19 September 1960 after 9 years of talks and brokered by the World Bank. The treaty was signed by then Prime Minister Jawaharlal Nehru and then Pakistani President Ayub Khan. As per treaty, India shall receive water from the eastern rivers, Satluj, Beas and Ravi, and Pakistan is to receive water from Indus, Jhelum and Chenab. This treaty is critical for Pakistan as it gets 80% of water under the Indus Water Treaty. Pakistan is also heavily dependent on the Indus River system for agriculture and drinking water. Let's keep in mind that Pakistan is one of the most water-stressed nations in the world. Restrictions in river flows could threaten food security, lower crop production and water shortages in Pakistan. The treaty has been termed as unusually generous to Pakistan. 80% of the water allocated to Pakistan and India is entitled to only 20% of the Indus system water, even though the rivers originate in India. According to reports, even Mexico receives a far smaller share of water under its treaty from the US. What does India's suspension of the treaty really mean? India, for the moment, can stop sharing water flow data with Pakistan, such as flood data. India can also create storage infrastructure on the Indus, Jhelum and the Chenab rivers. India could stop visits by Pakistani officials to hydroelectric projects currently under construction in Jammu and Kashmir. But the suspension will not have an immediate impact on flow of water to Pakistan for at least 2 to 3 years. This is what experts tell us. What are the legal options under the treaty? The treaty cannot be abrogated unilaterally. The modification requires consent of both Pakistan and India. Grievances can be referred to a permanent Indus commission. Parties can approach a neutral expert or arbitrators. Experts say Pakistan cannot approach the International Court of Justice if India shuns the treaty.
Okay, thank you so much for that, Parikshit. But on that note, we're going to slip into a very short break. On the other side, we'll get you key expectations from Reliance Industries Q4 FY25 numbers, so stay tuned in. Welcome back. You're watching Power Breakfast on CNBC TV 18. Now, big boy Reliance Industries will report its Q4 FY25 earnings today. Rima is joining in with us to give us the key expectations on this front. Rima?
Steady and strong. That's the way, perhaps, to describe the expectations from big boy Reliance Industries earnings in the March quarter. Now, on the top line, about a 1% revenue growth, 2.42 lakh crore. Year on year, the revenue growth would look more at 2 to 3%. EBITDA is seen on the flattish side. So 43,800 crore on the EBITDA, which means EBITDA margins of 18.1%, and profits are seen lower slightly, just about 2%. Now let's talk about the individual businesses. So Jio is going to be a growth driver. Jio is going to have another good quarter because the July tariff hike benefits will continue to flow through. Oil and gas is likely to be a bit subdued on account of lower volumes, and even retail is likely to see some sequential softness. So if you remember, Q3 is typically a very strong quarter for retail on account of festive season. So therefore, quarter on quarter, the Reliance retail EBITDA could be down, but year on year, it's still likely to report a growth of about 10 to 11%. And O2C is likely to have a mixed quarter. Cracks is slightly lower, but on account of better sourcing, perhaps the gross refining margins for O2C could be up. Now, the stock hasn't, year to date, it's up close to about 6%, but from its 52-week high, the stock has fallen close to about 20%. But bear in mind that a peer like Bharti Airtel, at least a peer in the telecom business, has outperformed Reliance Industries by 50% in the last 1 year. So investors are saying at some point, at least, there can't be so much disparity between Bharti Airtel and at least the Jio valuations of Reliance Industries. But what is dragging Reliance Industries down? One has been the slowdown in retail. So what investors are closely watching is when will the retail recovery come through? What is the company guide about that? Secondly, reduction in their capex intensity, which means more free cash flow. And thirdly, monetization. Is a Jio IPO coming? What do they talk? What do they say about that? What can they guide about potential monetization? These will be a few big things that are top of mind for all investors. That's a standard disclaimer from Reliance Industries from our channel.
Thank you so much for that, Rima. But let's move on, and we have Manisha waiting by to tell us what's going to be happening in the world of commodities, what happened overnight as well. Manisha, good morning, and gold is back to glittering bright.
No, it is. And if you look at the kind of numbers that we're seeing, gold is headed for a third weekly gain. We are back above $33.50 an ounce. So there's an opportunity buying happening on the lower side. And especially as you have skepticism over U.S. China deal. That is something that the markets are reacting to. So you wouldn't see a shortage of gold happen ahead of the weekend because of so many events and news coming in. What is going down clearly has been the crude oil prices and metals. Crude is headed for a weekly loss. There is oversupply, remember, and the OPEC and allies are looking to increase production for the month of May and June as well. And then you also have the dollar index gaining back above 99, and that seems to be weighing on not just crude but on metals as well, where copper is off at 3-week highs. Silver prices fell 1% overnight. And if you look at the China steel rebar, we're looking at a 7-month lows onto that one because of increase in supplies and uncertain demand. And Vinny, the only thing that's doing well really is the comfort food. Coffee gained up by 5%. Cocoa is up 2% overnight.
Absolutely, Manisha, thank you so much for that. But moving on and getting some updates in what was the biggest attack on Ukraine's capital this year. Russia pounded Kyiv with missiles and drones, killing at least 12 people and injuring more than 70. Following the attacks, U.S. President Donald Trump said that he is not happy with Russia and wrote to President Vladimir Putin on Truth Social telling him to stop. This comes as Trump attempts to push Ukraine and Russia to agree on a ceasefire proposal. Let's listen in to what the U.S. president had to say about the social media post and the concessions Russia was talking and taking.
I didn't like last night. I wasn't happy with it. And we're in the midst of talking peace, and missiles were fired. And I was not happy with it. We're putting a lot of pressure.
Can you maybe tell us that?
We're putting a lot of pressure on Russia, and Russia knows that, and some people that are close to it know, or he wouldn't be talking right now. The Prime Minister understands that better than anybody. He wouldn't be talking right now. He's talking, and we're putting a lot of pressure. I think he wants to make a deal. We're going to find out very soon, but it takes two to tango, and you have to have Ukraine want to make a deal too, and they're being hit very hard, and I do believe they want to make a deal.
Sessions has Russia offered up thus far to get to the point where you're closer to peace?
Stopping the war, stopping taking the whole country. Pretty big concession.
And with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.